Markets pretty much lackluster over the last couple of sessions. No real driving force either to the up or to the downside, even though we've seen some positive numbers out of the banking space and other stocks out of Nigeria. That is seemingly not making any movement in terms of market sentiment. What drove markets today?
Yeah, market closed lower today. That's the index dropped further down by like 9 pips. We'll continue to see fluctuations, but overall, the banking stocks did very well. Top gainers were First Bank, UBA, GTB, and then Zenith Bank. More banks have come out results today. E.g. Fidelity, they have a very, very good result. On other stocks, apart from banking stocks, what we're seeing is that people are beginning to take their slight margins. That's from slight increases that have happened in the past few weeks. We'll continue to see fluctuations before the end of the year as results come out and those news weigh down. By first quarter next year, when actual year-end results come out, I foresee a very, very, very positive outlook for the Nigerian Stock Exchange.
Of course, there's a lot of news out around the Euro bond that is going to be launched in Nigeria relatively soon, and a lot of optimism about the fact that it could be oversubscribed. And just looking at the local bonds currently, 20-year bonds sitting and the yields sitting at around 14.5%. Bond prices dropped recently. What is the driving force behind the drop?
Yes, it's a market perception, really. If we were to look at it, it started about for more than 5 months now, when the DMO, that's the arm of CBN that issues local debt on behalf of the government, increased volumes to be borrowed, and that's usually detailed in calendars. And then investors, of course, will take advantage of government wants for these funds. Of course, it's year end, we need to complete more capital projects. We're getting into an election year. It's very clear that the government needs a lot more money, and investors are keen in, and that's just it, really. It's driven the secondary market in itself, and then the short end of the fixed income market. Treasury bills, the yields on treasury bills for 1 year about 9%, and that's what it's at on the bond market. That's the shortest maturity trading, 6 Series 1. Doing about
Bankole, let's touch on the Ghanaian bond market. There were a lot of reports out that we saw flows from the Ghanaian bond market to the Nigerian, and then vice versa. So most of the flows going back to Ghana. What is your view on this, and do you think that we're going to see this trend continuing down the line?
Yeah, at the beginning of the year, the Ghanaian bonds were very attractive at double figures for short-term maturities, 1 to 3 years. In Nigeria, the shortest maturities that we had were at about 3% compared to double figures in Ghana. And then the 3-year bonds in Nigeria ranged from between 3, 4, 5% compared to those ones in Ghana. But right now, prices have dropped drastically. Yields, just like I said earlier, at about 9.5 on 1 year. And then for bonds of 3 years in Nigeria, we've got bonds of 11.5 in the secondary market. And this bond would also be reopened in this month's auction. We expect a marginal climb across all maturities there also. So if you see the way things are matching out between Nigerian and Ghanaian bonds, it's actually very attractive now to buy Nigerian bonds on the short end market. If you can get 9% for your 1 year maturities, which is still climb bid, I mean,
and of course,
we don't expect that capital flight.
Of course, this happening at a time where most investors are searching for yield. Unfortunately,